Welcome to TRADEREP. This is Shorthammer. It is the 13th of June, 2019, and we are looking at Amazon. Now, in our last video, we mentioned that we were looking for a potential repeater pattern on Amazon. What a repeater pattern is a pattern that's happened in the past that we believe the current chart setup may provide a repeat of what we saw happen in the past. So let's look back. On the 16th of April, we had a push up here and a break above our 1858 supply demand zone. Now this candle closed at 1863. Here is a push up above our 1858 supply demand zone, and this candle closed at 1860. About a 3-point difference, not a big deal on Amazon. What's important is the next day. The next day, we pushed up higher, but we didn't really go too far, and we ended up pulling back and what looked to be consolidating potentially above the supply demand zone. Then on the 22nd, we had a push down, a hold of the 1845, and a leg up of about 100 points to the apex of this move. So what we were looking for here. So this is the first sign. Second sign, the pullback hovering around this 1858 supply demand zone. And today we expected a test of the 1845, and if it held, a potential move to the upside. Now our first area of resistance is this 1868 area, which was the bottom of a channel that we were in on Monday, 1875 by 1868. That was a tough channel to break. And then once we went below, it was hard to get back over it. And it was just an area of congestion and contention just throughout the week. Now let's look at the lower time frame. So this is our 5-minute chart. So at the open, we had a dip on Amazon down through the 1845 area. I mentioned in the chat, hey guys, this is an important level for Amazon. Anyone that watched the video would know this is where you buy, tight stop. From here, Amazon took off to the upside. When Amazon got up in these 1862s and 63s, what I mentioned in the chat was, hey, if you followed me on this trade, or if you watched the video and you took this trade, this is where you start to exit for profit. Start to lock it in, because I figured the 1868 area would be the resistance level. And I wasn't quite sure, based on how the market was set up, as far as the SPY and just the overall market was a little bit shaky, a little bit choppy. I didn't see any trend at the open, so my thought was, hey, take profits quickly. Nice move off the bottom, 15 points, take the money, secure the bag. And if you watch Amazon throughout the day, it kind of held this uptrend. Every time we pulled back to this trend line, we bounced towards the trend line. Didn't quite touch, but we're just uptrending slightly on the 5-minute, but it's still a very choppy day. Up until the close, where we pulled below the trend line, and things are beginning to look a little bit more bearish. So what are we watching for tomorrow? Tomorrow we're going to watch to see if we hold this 1845. Futures went red, slight pullback. We'll see if we open up red tomorrow. If we open up red, the play that I'll be looking for, let me pull back our daily chart on Amazon. If we open up below this 1845 area tomorrow, the play that I'll be looking for is a retest and a potential fail and a drop down into this next supply demand zone, this 1818 by 1823 area, and also a potential retest of this downtrend line. So that's what I'll be watching for tomorrow on Amazon if we open up and we're in a bearish formation. Just retest. If we're below 1845, retest, push up, and watching on the 1-minute chart, looking for weakness and rejection, enter, ride it down, and keep it tight. As long as we stay below 1845 on that trade, I'll be bearish. Now, if we can't get up to the 1845 and I see weakness, I may enter still. But below 1845, I'm a little bit more bearish on Amazon, expecting it to go down and potentially test the next supply-demand zone, 1818 by 1823. Now, if by some chance a tweet comes out or some information comes out before the open and we reverse, this 1845 area is a major area for me. Above, a little bit more bullish, below, a little bit more bearish, but I'm watching it into this swing door area. If we get above this 1868, 1875 area, then I'm looking to the upside for a retest of these 1890s potentially. So that's also what I'm watching. Just all the way around, no bias, whether bearish or bullish. It just depends on the chart setup and the overall market, like what the market looks like. Are we trending down? Are we trending up? Are we going sideways? And that partially determines the plays that I take. I really like market cooperation. Like if the market is bearish, I like to be following that trend based on whatever I'm trading. I like it to be following the market trend. If the market's bullish, I like it to be trending up and sort of following that trend towards the upside. The trend is your friend, as they say.